This is how I made $5 yesterday trading Forex. Getting into it, we have a very complicated screen, but I'm gonna break it down for you. So starting off, we had some 3:30 p.m. news for GBP, some CPI. So I was mainly looking at odd JPY, but I did have the London session marked out, and we can see right here where the news came out, it was a bit bullish. As you can see, it's green, and it didn't affect the market too much, but still it was 1 hour before market open, so didn't want to trade GJ, especially when AJ was looking pretty good today and aligned with the bias. So we can see after marking out all the sessions, which is what I do if you guys are new to this channel. So I mark out New York session, Asia session, London session, and then trade London session. And we can see both New York session and Asia session, we came down a lot. We were very bearish and we had super big moves on New York session and barely any retraces up. You can see this tiny retrace. Asia session, same thing. We had big down moves and then a bit more of a retrace into a bit of this hourly fair value gap here. And then, yeah, we haven't really had a retrace. So, and on GJ, we can see a bit of the same thing as well. And then the 4-hour trend was bearish also. So yeah, and it was very bearish on AJ. Then what I was looking for was a bit of a retracement, not to go super bullish, but I wanted just a little bit, and even just to retrace into here and then go bearish. But initially my bias was bullish because we've had all this down movement and no retraces to help it move more to the downside. So I was looking at possibly tapping into this hourly fair value gap. I was looking at this 30-minute fair value gap here, which we just blew past, so delete that. And then what happened was we were getting a nice retrace, and on GJ, market open, we were getting some nice big up moves, which was good. And I was looking for bullish positions. And then we came up and we hit equilibrium of the hourly equilibrium, not fair value gaps, which is what I initially wanted. And yeah, I don't usually go off of equilibrium that much, but we were having big down moves after the big up moves. So yeah, we can see from this high to this low, this is the equilibrium here, came up into discount, and then people were selling in discount to then buy back here at a better price. So I'll delete that, and I'll delete these lines, which is what I was looking at for price, for TP points actually. If price like came up or had a retrace into a fair value gap on the 5-minute, because we swept these 30-minute lows, and then I was looking for a retrace into fair value gap, but we disrespected this one, which was very lucky, because if we hadn't, I would have gone bullish and would have lost. So yeah, well, delete these, just make it a bit more, screen a bit more clear. And then why did I decide to just suddenly change my bias? Well, we can see we were coming up, we had some nice up moves. Getting a retrace into fair value gap was what I wanted, but we hit equilibrium. I was like, okay. And then we see these huge down candles, we see disrespect these fair value gaps, break structure to the downside. We get another huge down candle, hit these lows, and then we just barely get a little bit of a retrace. We actually get a retrace into this fair value, which I didn't even notice because it's so small. But I was looking at this big fair value, but hey. And then zooming into the 1 minute, it was pretty simple. Just 1 minute. Did we get a break structure upside? We did. So it was just 1 minute break of structure to the downside, which we get off of. We see this down candle and then an up candle. That's a low. Make that red. We just waited for a close, which was from this candle. Enter. Stop loss was, where are we? 1 pip above this high, which was the same candle that formed the fair value gap, which I spoke about in my last trade recap. And I didn't want to do 2 pips, which is what I usually do, because I know it's just been working with 1 pip. If it goes up here, it's usually just gonna blow past. So yeah, and TP, better risk reward. And then I had take profits at a couple different points, which I marked out. I had these significant lows here. I had the end of this 30-minute fair value gap. And then final, I had at the end of this hourly fair value gap. Then this one was just another one which I could have used, which actually did get hit, as we can see, but I didn't use it, so we'll get rid of that. Yeah, we'll go into the 5 minute. Bang. Now, what I was thinking here was we had this consolidation, or we had nice, right as I entered, this was always lovely to see, and we see this big down moves. We're down here, we're nice in profit, but then we just start consolidating. And honestly, seeing these nice up moves was not very good. And this was when I went to bed around here. So I was really thinking that we were gonna consolidate and then have a strong breakout to the upside to retrace, and then maybe, I don't know, just keep moving up. I thought I had got it wrong because of GJ's bullish news and everything, but it was actually the opposite. New York session, we had very strong breakout to the downside, and as we can see, all TPs got hit within 2 candles, which is just amazing. So yeah, New York session really clutched up there and helped me get the win. But yeah, I only made $5 off of this because on my normal account, I could only place 2 positions to manage my risk $4. So I targeted these lows and these lows. But on my funded challenge, I could target all 3. And so I made like $70 on my funded, which is pretty good. That made me go up in profit quite a bit. I was in profit initially. I accidentally risked $100 and lost it, and now I've learned how to manage my risk pretty well. I've got down pretty good strategy, and I've just been building up that loss, got up to break even, and then this win put me at $70 above break even. So very happy. And yeah, this was the trade. Hopefully that all made sense to you guys, a bit more cleaner now. And yeah, hope you guys enjoyed. See you guys in the next one. Peace.